Hello, everyone. How we doing today? How's everything going? If you're in the house, drop a comment. Let me know you're here, and let me know how my audio is doing. Okay, just checking. Double check audio. Gotta always double check that. Today we're gonna be discussing how to qualify the line of credit. We're in a very interesting environment right now. We're seeing, interest rates go up. We're seeing interest rates on the HELOCs increase. Interest rates on the PLOCs are going up. We're also seeing certain banks, not offering home equity line of credit anymore, or they're not offering a personal line of credit. So we need to be aware of these things, especially if you're brand new into velocity banking. You're looking to implement the concept, and you're going through the process of applying for a line of credit or a home equity line of credit. You want to make sure that the bank that you're looking at, first thing is if they're even offering it in the first place, right? That's very important. So we're going to focus on one state. Okay, we're looking at South Carolina. Okay, I wrote a bunch of different banks. I'm going to share my screen. We're going to go to the bank's website. I'm going to show you where to look for these debt tools, how to qualify them, right? Read the terms and agreements. When you typically, I like to call the bank. I always tell my clients this, to call them directly, go right to the source. So I created a little script here on what to say when we first contact the bank, some of the things that we want to know, so that before we even qualify the line of credit, we're also qualifying the bank, right? Because we want to make sure that, again, the bank is offering what we need. And then once they say yes, okay, we do have that, then we start qualifying the debt tool itself. What's the interest rate? What's this? What's that? And then we'll call several other banks to compare, to shop around, to find the lowest rate, the best rate, the best debt tool that's catered to your financial situation, right? Not everyone's situation is going to be right for a personal line of credit or a HELOC, right? It's going to be back and forth. Just depends on where you're at, okay? So let me see who's in the house, and we'll dive right into this. Good morning, Joe. Good morning, Pearl. Hello. Awesome. Great. So let's just dive right into it, okay? So let's go over all the different debt tools. If you're brand new, this is a refresher for all of my loyal subscribers and clients. But it's always good just to hear it again consistently when you're mapping out your strategy. Even if you have a debt tool already, you might be in a position where you've been doing velocity banking for, say, a year or a year and a half or two, and we should be upgrading the line of credit. Maybe you've been rocking with a personal line of credit at 9 to 11, 12%. I was just dealing with a client recently. They're at a personal line of credit for 12.75%. And I think this was with PNC Bank. So they have a personal line of credit, and they have a ton of equity in their home. So I'm like, it's time to upgrade, right? It's time to get a second lien or first lien HELOC and dramatically reduce your borrowing costs from 12.75 down to between 3.5% and 5.5%, right? So this will apply. This information here will apply to those who already are doing velocity banking, and you're always looking to improve your strategy overall. So review on the debt tools. We've got credit cards, right? This applies to personal and business. Okay, we can find really unique credit cards that literally operate just like a personal line of credit, meaning we're able to withdraw credit from the credit card limit into cash without paying any cash advance fee or balance transfer fee. You will typically find this at smaller banks, credit unions, typically. Most other credit cards that we do velocity banking with have to come with a 0% intro rate, 12 months, 21 months, right? 18 months, 0% on purchases for that same amount of time, with a balance transfer fee preferably under 3%, right? There are quite a few balance transfer cards out there that are in the neighborhood of 5%, 4%. That's pretty high. In some cases, it might make sense if there's nothing else that we qualify for, if there's nothing else that we can use for the time being. But still, when you're looking for credit cards, we want to shop around, right? We want to find the best card catered to our strategy. So we got those credit cards. We've got personal, unsecured, revolving lines of credit, HELOC for short, or BLOC, business line of credit. Okay, this is the next stage up from a credit card, right? These rates are always lower than credit card rates for the most part, right? So it's one debt tool better than the first, right? The first debt tool that most people have or will get when they first come across velocity banking typically is a credit card, right? Most of us already have one in our system, and it can be added to a PLOC or a HELOC, right? It works perfectly together, right? So having a credit card is definitely, I would argue, essential in velocity banking. You don't absolutely need it, but it's phenomenal in terms of offsetting the borrowing costs on your main debt tool, right? So that's key. So PLOC, BLOC, then you've got HELOCs. That's the next stage up, is a home equity line of credit, either in the first or second position. And just a refresher, if you don't know what a first lien HELOC is or a second, a first lien HELOC literally replaces your first lien mortgage. Your traditional amortized 30-year, 15-year mortgage gets replaced with a first lien HELOC. So if you owed $250,000 on your property in a 30-year mortgage and the property value was $400,000, we could get, say, a $320,000, $350,000 or so home equity line of credit in the first position, where day one you would owe that $250 in the line. So now your debt tool is what you're doing velocity banking on, because you moved one debt into your new debt tool, that first lien HELOC. And these rates are typically always lower than credit cards and PLOCs and BLOCs, right? So that's one step up. A second lien HELOC is in the second position. You would have your first position mortgage, then you'd have this second lien, which is a home equity line of credit for typically a smaller amount, right? They look at the equity in your property, and you get maybe 70-80% of the LTV. So maybe I've seen as high as 100,000+, 150,000+ in the second position is what I've seen. And I've seen rates as low as 1.99%. I think I've seen something at 0.99% once, right? So they can be extremely low for a temporary period of time. With HELOCs, you have fixed rate options and variable rate options. Typically, when doing velocity banking, most people tend to go with the variable rate option, simply because a lot of the times they come with like an intro rate offer, right? Like I was saying, like 1.99, 2.99, 3.5, something really low in comparison to all your other debts that you're paying on. And they'll lock in that rate for, say, 6 months or 1 year, sometimes even as long as 2 years. And then it'll jump to the variable rate at that point. Well, in that first year of velocity banking, or year and a half, 2 years, we can cause so much damage in your debt that by the time the rate changes to a higher rate, when it jumps to the prime plus whatever rate it is, say it went from 2.5%, it jumps all the way back up to 5.5%, that's not going to affect us in any way, because how we're doing velocity banking, we're going to consistently continue to pay less than, we're always paying less than whatever the rate is on our debt tool. So if I have a HELOC at 5.5%, in reality, I'm only paying less than 2%. So if I started out with a 2.5% HELOC or 3%, I'm probably paying like less than 1.5, right? And it'll stay that way regardless of the rate going up. So it doesn't affect us. So when the rate goes to 5.5, we're still paying between 1% and 2%, because by then cash flow went up, right? Possibly income went up. Debts got eliminated. You're already in offsetting effect. Okay. So oftentimes we go with variables. So that's HELOC first or second. Then you've got the all-in-one loan, which is basically a first lien HELOC, but it is calculated in terms of the interest very differently than your traditional first or second lien HELOCs. And this rate on an all-in-one loan is typically around the same rates as a home equity line of credit. I think right now they're floating around maybe a little over 4%. Okay. So this is a very unique product, all-in-one loan. I only know one institution that is providing all-in-one loans, and that is called CMG Financial. If you know of another one, go ahead and drop it in the comments, or if you're catching the replay, go ahead and drop it in the comments. There's another bank called First Savings Bank that offers a first lien HELOC, but very different from the traditional first lien HELOCs. Okay. And if you go to my website, you go to resources, or in the description below this video, you'll see a link that says first lien HELOC resource, and you can check that out. Those are like the best debt tools that I've come across so far in the marketplace. All-in-one loans and first lien HELOCs with First Savings Bank in particular, right? And again, look at the description below. There's a link. I'll even drop it in the chat later so you guys can check that out. And then as it relates to the all-in-one loan, CMG Financial, you just Google that. I've done content in the past, so if you typed in all-in-one loan, you'll likely see my video or someone else's video talking about it. They have loan officers pretty much in every state. So there's not one source to go to, right? There's a multitude of people that you can speak with. So those are arguably the best debt tools that banks offer, right, for the collateral on our properties, right? So this only applies to people who have properties, right? And then the PLOCs and the credit cards, those are the best debt tools that say don't require any initial capital up front, right? It's just based off your credit worthiness. Now, at the same time, we can get secured PLOCs, secured credit cards, secured business lines of credit. For those who don't have great credit, it's a great tool to help build up your credit while preserving your capital, your savings. We don't have to lose it in the process of paying off debt, right? We can double it up, right? If I have 30,000 in savings, and you're thinking, should I just throw the 30 grand at my debt, and then that knocks it down? Well, that's a one-time use. Or you could say, I'll collateralize the 30, bank gives me another 30, that's 60K, right? And some people are like, no, that's not true. No, it is. You got 30K secured, the bank gives you another 30, that's 60. Now it just depends on how you use it in order to multiply the use of $1, right? And that's a key thing behind velocity banking, okay? Then there's these strategic debt tools that require capital, Okay, you have something that's called a cash value collateral loan or an insurance-backed line of credit. So this is for people who are practicing the infinite banking concept. You've been saving money in your life insurance policy, so you've been building up a lot of cash value in it. At a certain point, you'll be able to go to a bank, not every bank. There's a limited amount of banks that I know of. M&M Bank, Bancorp, and there's a few others that if you emailed me directly, I can send you a list. But there's a limited amount of banks that offer this insurance-backed line of credit. Once you reach a certain amount in your cash value, I think over 65,000 or over 70,000 plus in cash value, you're able to go to a bank and get up to 95% of the cash value in the form of a line of credit, typically at a lower rate than whatever the policy loan rate is from the insurance company. And then from there, when you combine infinite banking, because your money is growing tax-free, compounded in the policy, and then you combine it with velocity banking, my goodness, you're on a roll. And especially if you do it through a business, you get an insurance-backed line of credit under your business, then the interest is potentially tax deductible, right? So that's a great debt tool. I've seen rates as low as 3.5% in this environment. Now, although I do think lately the rates have gone up a little bit, so I've seen like 3.75 or 4.25. The more money you have in cash value, the lesser the rate would be, right? So if you have over $1 million in cash value, you probably could get like a 3.5 or lower percentage rate. Finally, is the securities-backed line of credit. This is phenomenal for people who have assets already, like your retirement accounts, 401ks, and things like that. Certain banks, not all banks, but we can collateralize, say, your $500,000 401k and get a $200,000 line of credit or $250,000 line of credit, let's say. Depends on the amount that institution is willing to give based on how much you have. So maybe only 50% or 60% of the total amount you have in that retirement vehicle, right? So say 401k. Very unique product that you could get an extremely low rate, right? Typically under 4% from what I've seen. And what's nice is, again, that you've got your asset that keeps growing. Maybe you're continuing to fund it. Meanwhile, you're able to use it to accelerate your debt even faster because now you have more capital to work with at a lower rate, and you're basically consolidating all that high interest debt into this low interest, simple revolving line of credit. And then you do velocity banking, dumping all your income in, taking expenses out, cash flow stays. You go extremely faster than probably most of the tools here on the board. So that is a nice review of all the debt tools that are available. And if you come across other things, go ahead, drop a link, okay, in the comments section. Let us know. Moving on to banks in South Carolina, okay? And just so you know, I will be in South Carolina October 7th to the 9th. I'm going to be speaking on October 8th, okay, in a town or a city, I'm not sure, called St. Matthews, right? So if you live in South Carolina, you're a client of mine, or you've been following me for a while, here's a great opportunity for us to meet in person. We can brainstorm, we can mastermind. One of my clients who is here, actually in the chat, I saw them earlier. Pearl here is hosting the event, putting it all together. She's bringing me up to South Carolina. Okay, I'm in South Florida. So we're going to hang out together. I already have some clients that have expressed interest and one or two who have already bought tickets. So I'm going to go ahead and drop a link in the chat so that you guys can check that out. If you go to my website, denzelrodriguez.com, you'll see a tab that says financial events, right? When you click on that, you'll see the first event says October 8th, where I'll be speaking, all the details, tickets. That's a phenomenal opportunity for us to get together, right? So coming back to the board here, I figured it'd be great to discuss South Carolina because I'm going to be up there pretty soon, right? So, but let me put that link first before I forget. Let me get that for you guys. Boom. All right, link is there. So check that out when you get the chance. denzelrodriguez.com/financial-events, and we'll get started. Coming back to the board here, banks in South Carolina. So I went ahead and did a bunch of research on all the credit unions. Okay, I just stuck with credit unions because I'm being specific to that state, right? These banks only exist in South Carolina, right? From what I understand, right? Now, you've got nationwide banks, you've got federal credit unions that maybe cover more than one state, maybe 2 or 3, 4 or 5, right? So some of these banks may do that, but their primary headquarters or location is in South Carolina. When we're doing velocity banking, I typically recommend that my clients, when they're looking for a debt tool, you go in-state first, do a 25-mile radius, right? Or maybe as far as maybe 50, just depends on where you live. Like if you live, 30 miles away from the closest town, then you're going to want to obviously expand your radius. But just looking within your state is cool, right? So you would do credit unions. You just Google it, credit unions or best credit unions in South Carolina, in Texas, in Florida, in New York, right? And then just put a whole different list together, see all the banks that exist, and then go one by one. Go to their website one by one, right? And you're going to look to see if you see a credit card, a line of credit, or a HELOC, right? Once you see it, write that bank down in your notes. Look for the number. Write that down. You're going to do that maybe 5 to 7 times, right? You want to build a list. And then one by one, you're going to call each and every one of these banks. So looking at South Carolina, you've got South Carolina Federal Credit Union, Founders Federal Credit Union, okay? So the SC all stands for South Carolina, FCU stands for Federal Credit Union, and then CU is just Credit Union, okay? So here's the different list. I'll share my screen in a minute, and I'll go literally one by one so you can see just how to properly qualify the line of credit before you apply, right? It's great to get all the information on how to apply and get approved for a line of credit, but what if it wasn't qualified, right? Then it's like, now you got the wrong debt tool. You did everything right on the approval side of things, but you ended up getting an inefficient debt tool for your strategy, okay? So here's a simple script, nothing crazy, okay? This script builds temporary rapport with the bank, and it's peaceful, and if you do it in your softest voice, you'd be surprised what information you can grab, right? And I've had clients do this multiple times. The goal is for you to build rapport with that bank early on and try and gather as much data as we possibly can, because we're qualifying the bank and the line of credit itself, right? So, hello, my name is Denzel. How are you today? Good. Now, typically when you call the bank, they will say, hello, welcome to South Carolina Federal Credit Union. My name is Susie, right? So you'll probably capture their name, okay? If you don't, ask them what their name is, okay? That's the first step of building rapport, is when you say people's names and you recognize them, right? So you say, hello, my name is, boom. How are you today, Susie? Question mark. Wait for an answer. Awesome. Glad you're having a great day. I am too. Here's what I need from you today. You know, you can say something like that. You go right into it and you say, can you connect me to the department that handles X, Y, and Z, the debt tool? Now, you're not going to say debt tool because they might hang up on you, okay? So you don't say that. I'm just showing you, pointing you back over here, okay? So you say, can you connect me to the department that handles personal line of credit and home equity line of credit? I'm looking to get information on that. Sure, I'll connect you. Or they might say, I can help you with that. Okay, great, thank you. Can you give me all the requirements needed to be approved for your HELOC, home equity line of credit? Oh, I'm sorry, Denzel. At the moment, we are not offering any home equity line of credit. Thank you. I appreciate your help today. Will there be anything else you need, Mr. Rodriguez? No. Thank you very much. Boom. Done. Right? So you just saved so much time, right? And what people do sometimes, they go to the bank, right? Or not directly to it, but they go to the website, they see home equity line of credit on there, right? So they see the information. It looks like the bank is offering it. But when you called, they're not. Why is my computer going off? That's weird. So when you called, they're not. So you're like, but why is it on your website? That's a bit misleading. Yes, it happens. Banks, by the time they update their website, okay, it takes them a while to update their website before they remove a product off the marketplace because of what's happening in the marketplace, how things are happening so fast in today's economy, right? So by the time they update the website, they're like, you applied because you thought it was on there, you get denied, and the reason why you got denied was because they wasn't even offering it. So they ran your credit, right? So that's a quick, valuable step right there to avoid getting any additional inquiries that we don't need, okay? Qualifying the bank to qualify the line of credit to get all the information that we need to be approved, right? So you might be watching videos on where it says, how to get approved at any bank, right? Well, the problem with those types of videos is they might go out of date, right? They might be out of context. Sometimes the general information is good. I like to do black and white stuff. I like to go to the source of any particular thing. Go to the source. So if I'm looking at South Carolina Federal Credit Union, it's on my list as a bank I'm going to look at because I live in South Carolina. I'm going to call that bank, run through this quick little script here, build rapport, say, hello, my name is, how are you today? From there, you're going to say, can you point me to the department? Can you connect me to someone at your bank that knows everything about home equity line of credit and or the personal line of credit? Boom, they connect you from there. Now you have someone again. Repeat. Hi, my name is, what's your name? Oh, hello, George. How you doing? Can you connect me to Bomb, right? I heard you're the guy to talk to that does, everything on home equity line of credit or HELOCs, credit cards, whatever it is. Get all those details in advance, and you continue to build rapport with that person. Keep saying their name, crack a joke here or there. You're trying to pull as much data as possible, right, to see if this is the right tool for you. So it's very important stuff. Very, 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 very important. So recap, debt tools, banks in South Carolina. Here's what we're looking at. Here's the script. Nothing crazy. Very simple. Here are some of the key details right, that you'll ask if they didn't provide it, right? So if you get to this point where it says, can you give me all the requirements needed to be approved for your HELOC, right? Home equity line of credit or PLOC, whatever debt tool we're looking at, they're going to go through it. Oh yeah, we require a 700 or more credit score. DTI has to be 45%. Current interest rate right now is 4.5% with a introductory offer at 3.75% with automatic deposits. You must be a member of the bank. Okay, so you have to have a checking or savings with us in order to get approved for the HELOC. Can you imagine going to the bank's website, you apply, you get denied because they're like, we can't accept you because you're not a member, and that was an inquiry, right? They're going to run your credit, so that's why we call first. And then I would even go a step further. When you actually go to apply, I would do it in person at the bank, face to face with someone, so they see how serious I am, what I'm looking to accomplish, and how they can best serve me, right? So they'll keep going down the list. The HELOC is interest-only payments, simple interest calculated daily. The draw period is 10 years. After that goes to amortize. We do allow you to renew the HELOC after that draw period. All right, and then you already went to the credit score and DTI. We talked about the discounts, the intro offers. We do offer mobile app so that you can easily move money from your HELOC to your checking. So we have, very user-friendly banking and mobile. I think that's important. With Velocity Banking, it has a very user-friendly interface for the app. Because when we're doing Velocity Banking, you're going to have to consistently log in all throughout the month to move money in and out manually when you're using a PLOC or second lien HELOC, right? When you're using a first lien HELOC, the checking account is in the first lien HELOC. It's already like together most of the time, and you'll want to ask those details as well. So if you're looking for a first lien HELOC at, say, one of these banks, or you went through this process in your own state, you want to ask them, with the first lien HELOC, is there a separate checking account, or is it integrated into the line itself? Am I able to set up auto pay and direct deposits into the HELOC automatically? That is going to be extremely advantageous for Velocity Banking because it eliminates a lot of steps in Velocity Banking itself. The whole manually moving money in and out, and then paying bills, right? If that's all automatic, then you're saving more money on interest. So that's pretty powerful. Now, what we'll do is I'm going to share my screen real quick. Boom. So here's what I did. Just typed in credit unions in South Carolina. Nothing crazy. Now, because I'm in South Florida where my computer might get a little weird on me sometimes, and it shows me banks where I live because it's looking at my location, right? So if you're in South Carolina, you live there, you should get probably even more banks, right? But it looks like it's showing me the most popular banks in the major cities, I would assume, in South Carolina, right? So the first was South Carolina Federal Credit Union. Boom. I hit the website. I already saw a number there, so I would, jot that down. And I try to see what they're promoting, right? They're promoting different stuff here. Okay. So when I'm looking for the debt tool, typically it's going to be under borrow. You see the credit cards. Cool. We can go there real quick. See what kind of credit cards they got. So I got this Platinum Cash, World MasterCard. I like cashback rewards cards and the points cards for Velocity Banking because typically we're recovering the cash back each and every month to reduce our borrowing costs. So it says 1% cash back on everything. This is actually not really all that attractive, right? Because when you compare it to some of the bigger banks, now here's where I would say that the bigger banks often will have much better cash back rewards, points, and incentives, right, for the credit card itself. But credit unions typically will have that one unique thing, which is the 0% on balance transfers, 0% on the fee. So no fee whatsoever to do a balance transfer, and it's 0%. So that's something that's very unique with what you typically will only see with credit unions. And the fact that you can pull money from the card consistently, almost like a cash advance, but without the additional interest and fees that come with a cash advance, right? That's typically only in credit unions. Here's the next tool, personal line of credit. It's typically under loans. Need help with extra funds. Looking to make a big purchase, take a trip, pay tuition, or repair your car. See how they sell it? They sell it to you to go into more debt. But that's not what we're doing with Velocity Banking. No, we're looking to pay off high interest debt, offset interest costs, increase our cash flow, and reduce our expenses on a monthly basis. Sell it to me that way. I'll buy that all day. But they don't do that because it's not typically that advantageous to teach you anything about personal finance. So it says personal line of credit can provide you with a line of credit for your financing needs. This account can also be used as an overdraft protection for your South Carolina federal checking account. No prepayment penalty. Cool. Approved credit limit. You only need to apply once. Okay, nice. They already disclosed their max as low as $500 to $25K. Their APR is as low as 12%. That's pretty high. 12%. I'm pretty sure if I went to continue my research, I could probably find a lower rate, right? So I'll write that down for now, 12%. Okay, cool. Let's look at their other things. Boom, home equity lines of credit. Low application and closing fees. Okay, so this does have closing costs. When you research other banks, some will have no closing costs whatsoever. Everyday low variable rate. Payment depends on amount of line used. So that means that their HELOC is most likely a principal and interest only payment, right? So it's principal and interest together. Typically the payments will be higher than a HELOC that just does interest only payments. Now, I used to often create content in the past talking about how you want to have a principal and interest only payment. But then as I learned more about Velocity Banking, there really isn't much of a difference other than what's required at the end of each month on that due date. So if you have a interest-only HELOC at 3.5% and a principal and interest HELOC at 3.5%, there is no difference as to how that rate is being charged. It's just what is required, right? With an interest-only debt tool, they're not requiring you to make any principal payments. With a principal and interest payment, they're requiring principal to be paid down on the tool itself, right? So then it says that we can check the rates here. Let's see. So you got to put a bunch of information in. They're probably going to want to capture your email and stuff. Let's see what this is. Okay, that's on mortgages. Gotcha. So some banks have you go through some extra steps. We're not going to do all that here, but I'm just showing you. Here's how I found my stuff, right? And then finally, we'll go to contact us. Boom. Saw the number, right? There's the different areas that they cover. Okay, cool. So I got multiple branches, right? Here are all the locations, and you compare it to where you live, and you say, okay, boom, that's on my list. Get the address, get the phone number of that specific branch that I want to talk to, right? Let's go back. Let's do the next bank. So let's do Carolina Trust Federal Credit Union. I had them already opened up here. Look, the other thing I want you to pay attention to is the websites, how their websites look. If it looks very rinky-dink, right? Very like, yo, like my 13-year-old sister could have did this, right? If it looks very, what's the word, right? I think I've already expressed how I feel about this website just based on my comments. That might tell you something about the mobility, the features and benefits, the user-friendly use of the online banking itself, right? That's important when we're doing velocity banking is, take a look at the website and see how they're positioning themselves. This looks very like cheap, okay? So they got a personal line of credit here. And look, what they're offering is cheap. Overdraft line of credit also available up to $1,000. Okay, so that might not be the same as a personal line of credit. So they're not giving us too much information. Let's view the rates here. HELOC rates as low as 5.75%. That's pretty high, right? It's a 15-year home equity line of credit. So the first 10 might be revolving, and then it changed to amortize, or the whole 15 years might be revolving. But 5.75 is pretty high. We could most likely find something less. Now, personal line of credit as low as 12%. So there they go again. 12%. I'm just going to write that down. So, I'm not that attracted. Let's keep going. Carolina Trust Federal Credit Union. Let's see. Let's do Cairo or Caro. Let's see. What the heck is that? Open a Casasa cash. Look at this. See, they put more work into this. Do you see how rinky-dink this site was? Rinky-dink, right? Come over here. They caught my attention with whatever the heck that word was. This might be an interesting bank to do business with, right? Let's go to loans because we're looking for the debt tool. So we go to home loans. Boom. Very interesting how they put home equity line of credit as the second option. That's another interesting thing I pay attention to, right? I'm like, most banks, they put their home equity line of credit or HELOC all the way at the bottom of the site, and they typically don't even put too much details, right? But here we have this bank. They might know a thing or two about what we're trying to do. Maybe. I don't know. So it says access to power your home equity line of credit. You can get a HELOC card to spend your funds. See, I'm already, something is brewing inside of me already where I'm like, oh, okay. Look how they're using the language. They're saying velocity banking without even saying it, right? They're speaking in our language. Access the power of your home equity line of credit with a home equity card. That means I can pretty much automate velocity banking, probably, but we're going to, we'll call the bank, go through the steps, and make sure. You can use the card anywhere, just like your debit card. So I can use that card likely to make my car payment, other debt payments, and any other expense. That means my money stays in the HELOC for a longer period of time, reducing the borrowing costs. Not bad. All right. Let's see. Let's see if we can find their rates. Don't see it. Maybe at the bottom here. Usually there's like a button somewhere that says our rates or rates. But you can put that on the list, right? Home equity line of credit, and then we just want to get more info. And we'll go through the thing. Then we do personal loans. And it looks like they do not offer a personal line of credit, but they do offer a HELOC. So we'll put them on our list. Let's go back. So I did Cairo, I did South Carolina Federal Credit Union. We did Carolina Trust. Let's go to Rev here. Another nice looking bank, see? Higher quality. Makes me think that their debt tools will be higher quality. Lifestyle loans. Line of credit and lifestyle loans. Okay? Now they're selling it in a way to get you into more debt, but that's okay because you guys know better. You've been watching me. Applying for a line of credit. So we got to put in our information. We won't do that. See where it says rates. See all loan rates. Recreational. Personal. Line of credit. Boom. Ooh. 9.9%. So at this point, if you were in South Carolina and you're doing your research and you saw 12%, 12%, 12%, and then boom, after our fourth bank that we hit, this is why most people stop after they look for two banks and you missed out on a lower rate. So now 9.9% is our new low. Can we go lower? I don't know. Got to keep doing research. So they offer personal line of credit, $20,000 being the max or less, as low as 9.9%. And that's obviously based on your credit worthiness. Okay. Then they have home equity line of credit here, but they want you to contact them to get more information. Right? So they made it a little harder. Let me go to mortgage loans here. Let's see if they put it on here. HELOC loans. Got to be careful. There is such thing as a HE loan, a home equity loan, and then there's a home equity line of credit. So you always want to make sure you're crystal clear with whoever you're talking to. Hey, I'm looking to acquire a home equity line, not a loan. All right. All right. So we write that down. Rev Credit Union so far has the lowest interest rate on a PLOC in South Carolina. All right. Just based on the research we've done so far. Let's keep it going. And let me know, you guys enjoying this? Put this in the comments. Let me know. Is this helpful in terms of in your own state what you could be doing? You go on Google, you have your windows open, right? And you start opening up the different sites. Let me know if this is valuable. Here's another one. South Carolina National Guard Federal Credit Union. So you most likely probably have to be in the military, National Guard, in order to qualify for this kind of stuff. Now, here's the other thing I'll say. Depending on what state you're in, what department you serve in, government, military, fire department, police department, right? Typically, there will be banks catered just to you. And you will potentially get rates that you can't find anywhere else. So if there's anyone here who served in the military, anyone here in the police department, fire department, government, right? Or maybe you work for a Fortune 500 company that literally has maybe their own bank, their own credit union. Typically, you'll find HELOCs and PLOCs at rates that are unheard of, right? Because of their niche, who they're serving exactly. So let's go to personal loans here. Boom. Line of credit. Boom. Credit limits up to $15K. Monthly payment is 3% of the outstanding balance, which is pretty high. We don't care for that. Loan rates in turn based on credit worthiness. They're not giving up what the rates are, but hey, if you're in the National Guard, you can put that on your list. Let's look at real estate loans. Home equity loan, but we don't see any information on home equity line, right? So you want to be careful. But again, put that on your list if you're in the National Guard in South Carolina. Boom. Let's look at this Santee Cooper Credit Union. Another nice looking website. Loans. Personal. Checking line of credit. Got to be careful with these words. Sometimes, often, a checking line of credit has much higher rates than a personal line of credit. So this bank seems to only offer what is called a checking line of credit. We don't know what the rates are. So you just want to be careful with that. So it says, with a signature line of credit, you can have peace of mind knowing that your checking account has overdraft protection of those times when you need it most. Let's go to loan rates. See what they got here. Load, load, load. Come on. I think my computer is getting hot. Too many windows open probably. Come on. There we go. Oh, ooh. Okay, spoke too soon. Look at that. Signature line of credit, 7.99%. That's our new low. So we went from 12 to 9.9 to 7.99 being the lowest. Now, icing on the cake would be if the line is, offering a credit limit that's higher than the other ones, And if not, that's cool. Just depends on our situation, right? Home equity loans at 5.5%, but they might have a home equity line of credit. So you got to pay attention to that. Those are the questions that you would ask once you get someone on the line. So look at that. Santee is now in first place. So South Carolina State Federal Credit Union, is that the same as South Carolina Federal Credit Union? Let's find out. And then there's something called State Credit Union. Okay, where was I? Santee. Let's do this. CPM Federal Credit Union. Let's go to rates. Checking. Personal loan. Mortgage first, ARM. HELOC, okay. Look at that. Variable, 10-year draw, 1.99. Introductory rate. How long? We don't know. So you would evaluate, do I take a fixed rate at 5.99? If Velocity Banking tells me I can be debt-free within 5 to 7 years or less, and I get 1.99 for the first year, how much more damage could I do up front? because that's what it's about. It's the upfront damage that causes a long-term effect, right? So this is what we're, constantly looking at. Let's see. I didn't see a personal line of credit. Go to loans. Personal. Personal. Oh, line of credit. As low as 9%. Ooh. Okay. That's not bad. CPM Federal Credit. Gotcha. Let's keep going. That State Credit Union. Loans and credits. Home equity line. Cool. No closing costs. Low AP. Oh, look at that. Enjoy an introductory rate of 3.5. After 1 year. That is juicy. 3.5% for 1 year. I like that. Rate will revert to the regular variable rate, maximum being 18%. Cool. Bar up to 85% LTV, not bad. Okay. No closing costs, no prepayment penalties, no annual fee. Oof. 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 Not bad at all, guys. So this bank so far, credit limit would need to be increased by at least $10,000 to avoid closing costs. Okay. We're typically getting way more than that. Nice. For a limited time. Keyword, limited time. It's probably going to go away with inflation continuously going up. So that makes sense. So if I'm in South Carolina and I have a home that has quite a bit of equity in it, I would argue so far State Credit Union looks very attractive. 3.5%. No closing costs. No annual fees. No prepayment penalty. Right? And I get up to 85% of the home value minusing existing mortgage, of course. Right? Very attractive. And this is what I do. Look, I want you to, go back when you watch this video again, and I want you to see how much time it took us to do this. Like, obviously, when I'm alone, not recording, I can go much faster, but I'm actually talking it through, going slow, showing you the different banks. We've been spending, like 30 minutes or so doing this? So 30 minutes of your time to find the best bank. You're basically qualifying the bank before you even call them. So that's a great way of qualifying the bank. You do the research, look at the website, look at what they're offering, jot down the numbers, phone numbers, the addresses, the different locations that they have. State Credit Union is in Columbia, South Carolina, so that must be a major city. I think the other one is Charleston. I think that's like right here. So, yeah, not bad at all. Let's see, Palmetto. We haven't hit them up yet. Palmetto don't look too bad. What is the Hotheads Challenge? Interesting. I like banks that do stuff like that. They're like, throw interesting stuff your way. Okay, so doesn't look like they have a line of credit. And I'm not seeing home equity line of credit, but let's see if it shows it in their rates. That's probably why I didn't write them on the board. So notice how this bank doesn't even show it. Doesn't mean they don't offer it. I've learned that too a couple times. But it's not so attractive at the moment. Now there was another bank that I have found I don't see on the list here. So it's called Founders Federal Credit Union. That was one that I wrote down. I don't think we hit that up yet. Let's go to personal. Oh, personal line of credit. Look at that. Relax. Your money is there. Interesting. They want to be funny. Okay. Ooh, 9.9. Okay. That was very similar to that other bank at 9.9. So you got some competition. I'm getting a military vibe from this website, but I'm not sure. All right. Cool. And then they also had home equity line. Relax. Use your equity. Yeah, look at that. This bank wants to be funny. As low as 5.5%. Okay. It might be worth considering, but so far State Credit Union still has the better deal. Right? So again, you're doing your research. You're calling the banks. You're going to the source and you're asking the source, how do I get approved for these things? Right? Now, in addition to everything we did here, especially for my new people, you're going to want to hit this playlist all about the line of credit. I go in depth, how to get a personal line of credit, the best personal line of credit, what is a line of credit, multiple lines of credit, requirements for a line of credit, how to use a line of credit, what to avoid with a line of credit, how much you should apply for a line of credit, how many credit lines should you have, what do you need the line of credit for. Now that is a really good video to watch when you've gotten to the process where you've qualified the bank, you've qualified the line of credit, you've positioned yourself, you've gotten all the data, and you're ready to get approved. You're ready to apply for the line of credit. One of the questions they will ask you is, what do you need the line of credit for? Based on this answer could make or break you, right? If you say, I want the line of credit to start a business, red flag. Never say that. I want the line of credit so I can do velocity banking because this kid on YouTube who I don't know and never met, named Denzel, not Washington, told me that, I could pay off my mortgage in less than 5 years. The bank is going to be like, what? And look at you with three heads. So you don't say that either. You don't say I'm getting this line of credit so I can do velocity banking so I can pay off all my debt and pay less interest so you guys profit less. No. We don't say that. Watch that video. You'll get an in-depth on what to say. Right? One of the key things we say, I'm looking to get the line of credit to pay off some debt, reduce my expenses, increase cash flow, and build my credit. Very simple, nothing crazy. Those 4 key components. I'm just looking to pay off my debt. I got some debts I want to get rid of, consolidate. You have to speak bank language. I'm looking to consolidate. They love that word. Looking to consolidate some debt, pay off some debt, and just kind of, reduce expenses and increase my cash flow, put myself in a better, position overall. And I'm also looking to use this line to build my credit as well. Bomb. No red flags. Okay. This video is great preparing to obtain a line of credit, right? This is great because once you found the bank, qualified the bank, you got all the details, right? You're getting ready to apply. Before you apply, one of the things that you're going to have to do is open up a checking and a savings with that bank. That is a form of establishing rapport and a relationship with the bank. Now, you're not just doing it just to do it, but it's going to help you do velocity banking faster, because if all your income, paychecks, and bills are coming out of the same bank that you have your line of credit at, then you don't have to do external transfers and potentially pay unnecessary fees to do velocity banking. So that is a primary video you're going to want to watch. Another video on how to use a line of credit, how to qualify the line of credit. So years ago, I did this, how to qualify the line of credit. And so here I am doing it again. And then it says how to get a line of credit in a crisis, right? Are we not in a crisis? Yeah, COVID, high inflation, we're in a recession. Yeah, we're in a crisis. So you're going to want to watch that video as well. So that's powerful. Then if you want to really position yourself, here are tons and tons of case studies going as far back as 2018 to as late as this year on on how to get how to do velocity banking, all the different debt tools, right? Multiple case studies, guys, multiple case studies dating all the way back 2018 up until now, how people all across the United States are doing velocity banking effectively. And then this is a phenomenal playlist on velocity banking in a crisis, right? And when you go to my YouTube channel, you click playlists, you'll find these things. So I talk about, how velocity banking works in a crisis, how we pivot, how we prepare, how do we position, all that stuff. So these 3 playlists are critical, right? And that was that bank. I can close that out. We went over the most attractive banks there. We did good stuff. We did some good work here. So I'm going to take it back to the board. And that's how you best prepare, right? Best prepare for what we're trying to do. So now we're going to look at some Q&A. So I've been talking for an hour now. Not bad. If you guys got any questions, go ahead and drop them now. Let's see. Third Federal Bank, also good. Not sure if that's in South Carolina or not. Is it good to up HELOC request more money or hold off till economy corrects itself? So this is a question of, from what I understand, we have a debt tool already. Say you got $100,000 of home equity, right? Already approved, $100,000, and you have an additional $50,000+ available in equity that you could add to that home equity line. What can happen sometimes when we increase our when we increase our debt tool credit limit, it can increase our rate, right? So they might give us a higher rate. So you'll just ask that, hey, if I, again, go back to the source. If I apply for an increase on my HELOC, will that increase my rate? No, it will not, Albert. Great. I'd like to get an increase on my HELOC. Why not? Every 6 months or so, I'm always increasing the credit limits on my credit cards. Why not? The more capital I have, the better I'm securing my position when markets go down, right? When things go on sale, I now have more capital to purchase things with, to make investments and create a ton of cash flow. That's how millionaires get created extremely fast in down markets. So having that awareness, I don't think it hurts, right? Let's see. Did some research. Most banks HELOC rates are with 5 to 6%, and we showed that, right? But even in the midst where most banks do this and most banks do that, I'm doing more research than most people, and I'm going to get rates that most people never get. And that's what my clients get. And you'll see that in the case studies. You'll constantly see rates lower than what most of the environment is dealing with. Because that's what velocity banking forces you to think outside the box, become critical thinkers, think for yourself, ask questions, right? I was shocked to see you looking through my state. Awesome. Awesome. Hey, man, let's meet. Sylvia says very helpful. Awesome. Very helpful stuff. Yep, very helpful. Love it, love it, love it. Doing research before applying is great. Prevents inquiries on your credit report. Too many inquiries can lower your credit score, which then makes you ineligible for the debt tool, which then slows down velocity banking, which means you then have to stick in the debt snowball, debt avalanche, and until you build the credit back up to apply again. Can't tell you how many non-clients did that. And then they became a client after getting denied multiple times. They're like, you know what? I got to work with you, Denzel. I'm like, I'm going to say the same things I've been saying in my videos, but come on, let's work together, right? Because you need that hand holding. Okay, cool. Then we wait about 3 to 6 months, and I'm like, don't apply for anything. I will say I have had some clients, they don't listen to me. Now, maybe it's my age. I don't know. I'm a young guy. And I'm dealing with people who are 40, 50 plus years old with different egos. So sometimes it can be tough. But at the end of the day, the content's here. I'm going to keep reiterating the same stuff. If you watch that video on how to qualify the line of credit that was done 3 years ago, I'm literally saying the same stuff now. Not much has changed. The only thing I did different was I focused on one state, made a little script, and the same key details as what I've been saying 3 years ago. I mean, when you see the consistency, now it's just a matter of you following suit. Okay, what was this question? Should you go for the max term, 5, 10, 15, 20-year option for a HELOC? So the from what I understand, Rox, you do not have an option there. I might be incorrect, but when I look at the website that I just gone through, all the different websites on the banks, they tell you what their term is. So they say we have a 10-year draw, or we have a 5-year draw, 15-year draw. Now, when we're looking at, because your question then would make sense if you word it this way. Okay, this bank is doing 10-year draw, this bank's doing 5, this bank's doing 15, this one's doing 20. Which one should I go for? Well, let's go through all the details, right? Which one makes the most sense? And that's where it can get a little tough, right? Honestly, so let's map this out. If I had to figure out, like, okay, which details, Denzel, out of all the details, okay, because you guys are trying to really like maybe prioritize which details matter more than the other. And again, I would have to see your numbers, right? But typically, this is where your mind, most of our minds go, and even mine, is the rate, right? That's the most attractive thing. Where can I find the lowest rate? The lowest rate. Okay? So that's understandable. But sometimes the lowest rate isn't actually the best option because of how the debt tool works itself. Okay? There might be some limitations, right? But it's still a big factor. So I get it. Rate is important. The next thing for me is the use. This really summarizes the tool itself. So if I was looking at a first lien HELOC, and notice how in one of the websites earlier we saw that they give you a debit card, right? That is a part of the use. So if I have a first lien HELOC at a 3% rate, but it doesn't come with the debit card, okay, that means I have to have a separate checking account and I have to do manual transfers in and out. Versus another first lien HELOC that maybe the rate is higher by a point, 4% higher, but it comes with a debit card. You're able to do auto pay, right? Direct deposit. So you have to understand how these little things right here has to do with velocity banking, how your money goes in and out of the line of credit, which can manipulate this rate to actually be less than that rate. Okay? Very, very, very important. So rate, the use, okay? That also is including the banking function of it, the mobile app, the login, okay? And I also like the discounts and offers. Because again, velocity banking, if it truly gets us out of debt, like all the gurus say, including myself, within 5 to 7 years or less, and if I can lock in a 1-year rate of 2, 1.99, 3.5, and I eliminate so much debt in that first year, 2 years, then going with that lower rate option with the discount might be better than a fixed rate option, right? Because those are options as well. Some people go with fixed rate options, so you have to measure it. And I'm like, well, I could pay 1.99, 2.99 for 1 year, and then it jumps above that other option, the fixed rate option. It jumps above it, but I never actually pay that amount. That's the key thing with velocity banking. When you're mapping out the numbers, you're like, oh, I was at 1.99, 2.99 for a year. Now the rate has gone up to 5.5%. I was just doing this with a client. They had an introductory rate offer for a really low rate, and then it jumped more than double what they were at. So I think they were at like 2 something. Now they're at like 5.5, so they're above like 5%. And they were freaking out. And I'm like, what are you freaking out for? Look at how much debt you already got rid of in advance. Plus, let's actually calculate what you are actually paying. And then it came out that they're paying like 2% in interest, in net interest, what we actually pay. Okay. So back to that question, what term should I go with? Well, if there's a 20-year draw, and that seems attractive because it's revolving for 20 years, but the rate is 5.5% versus a 5-year draw at 2% introductory, which then jumps to above 5 after 1 year, I'm going to go for this one more than likely, especially if the use is in alignment with what I'm trying to do. Probably just going to go with that, right? And so it gets more difficult when we're looking at HELOCs. Now, with PLOCs, you're just looking for the lowest rate because they all pretty much work the same, except when you're dealing with a checking line of credit or an overdraft line of credit. There might be some limitations there. But if you're dealing with a personal or business line of credit, you're just looking for the lowest rate. And we found 7.99 was the lowest rate, which was a checking line of credit in South Carolina, right? So, and then we saw 9.99 and 9%. So we're just looking for the lowest rate when we're dealing with PLOCs and credit cards for the most part. When it comes to these HELOCs, it gets really interesting because there's a lot of different ways that we can use a HELOC because there's so much more to work with. right? So hopefully that helps. Let's see. Okay, now if I increase my debt weapon, if I lose equity and go upside down on my home, can the bank close my HELOC? Well, how could that ever happen? Right? I don't understand how that can happen. So let's, especially if you're doing velocity banking, you're not creating any more debt. All you did was increase the line. My freaking arm thing is making so much noise. I gotta oil it up or something. So, and I gotta look at your numbers again. I know you're a client of mine, so we can evaluate this. But for example, let's just say the value of my home is $500,000. I already have $150,000 HELOC, and then I've got the mortgage, and only $100,000 is owed on that. When you get to a point where the mortgage balance is approaching how much you have in equity, you might as well just do a first lien HELOC. Okay? You might as well. If you have $500,000 equity, or that's what the value of the home is $500,000, and you only owe $250,000, $300,000 on the property itself, that's what's owed left, and you have a $50,000, $75,000 second lien, and you've got no other debts, right? You wiped everything out, the cards, the student loans, no other debts. Okay, this is just for people who have no other debts. The only debt left is the mortgage itself. And you've got all this equity, all this value. You only owe like $250,000, $300,000. You might as well shift to a first lien HELOC and have, say, a $400,000 HELOC. So you went from $150,000 second lien to now $4,000, and in the $4,000 you owe $250,000. So you just completely eliminated the mortgage, right? It's gone. The limit is at $4,000 now. Value's at $5,000. The property would have to go down in so much value. And even when it did, sure, the bank could reduce the credit limit, but we know velocity banking rules. We don't over leverage. If you do that, then yes, you should expect your credit line to get frozen, right? And I've done tons of videos on this where I talk about when you read the articles on the internet of people getting their HELOCs frozen or canceled, look at the details. Every single time they either stopped making payments, they made a late payment, and or they maxed out the line. Why would we ever do that in velocity banking? We don't max out our lines, really, ever. If you do, it's because you're not working with me, number one, or you are working with me and you didn't follow the rules, and then you call me when you're in a rut, and then I'm supposed to fix it. But that's what happens, right? Life happens. I get it. So I don't see how that could affect us. But you tell me, right? You guys are critical thinkers, right? You guys tell me. What am I missing here? Right? $500,000 was the value of the property. Let's say it goes down by 25%. So it loses $125K, drops in value from 500, right? So that would mean that the value of the home is now $375, but my credit line was $400. I only owe $250 on the line. The bank could just reduce the credit limit just like they reduce credit card limits all the time. Right? they could just reduce the credit card limit. Why would they, on a first lien HELOC, if I'm always on time, right? There's rules that protect people too nowadays. Banks can't just freeze you up, especially if you've been making your payments, right? You're on time. Like what is, I don't see how that would be an issue. But again, I got room to learn here. I'm open. So help me out. What credit unions to go to secure the personal line of credit with your own capital and savings? So Rashad, typically the banks that I went through just now, if they offer a HELOC, then they most likely will have a secured option as well, right? We went through like 10 different banks and we did not see one mention of secured line of credit. They typically don't promote that. The rates are extremely low on secured lines. So it's a matter of just calling the source, the bank, and asking them that. But an indication for me would be that, oh, Founders Credit Union is offering a HELOC, so they most likely will have a secured option as well, right? Says, thank you, I will apply for an increase. Yeah, and then the other thing is, whichever bank that we're at, there's a limitation as to how much you can get, right? So banks have their cutoff point as to how much they're willing to give you. So if your property is $1 million, but the bank only gives $600,000 max credit line, I mean, then you're good, right? So the property, if say your property is worth $1 million, and you got from the bank the max credit line is 600, but you only owe 3. So only 50% of that. The property would have to lose 40% of its value, and even more than that, for the bank to come and reduce the line and to then close it. But that would only happen if you're you're late on payments, you're delinquent, or you're maxing the line out, right? And that never happens when we're doing velocity banking. We don't do that, right? Because we're disciplined. And whoever has done it went on the internet, put an article out, and then said velocity banking is terrible. Why? Because they didn't follow the rules. They over leveraged themselves. Not smart. Not smart. So Rashad, hopefully that helped. Typically the banks that offer HELOCs will also do secured credit line as well as secured credit cards. That's typically like any bank. About to call all those credit unions right now. Love it. If you're in South Carolina, then that's what I would do. If you're not, then I would do everything that I just said. I just threw my marker, my goodness. I would do what I just said for your state. Google credit unions or best credit unions in your state, right? In Florida, in Texas, wherever that may be. And then you get a list of all the credit unions. And then if you don't like what you see, then you look at federal nationwide credit unions. There's some really cool, bigger credit union banks that cover 5, 7, 10 different states that might have even better deals than everything in your state. Maybe, maybe not. So that's worth looking into. I'm going to have you guys look at the board again just to make sure you guys take your notes down so you can see all those banks, write that down. Any other questions? We're an hour and a half in. If you got questions now, put them in the chat. If not, my lesson is done here. And I look forward to meeting some of you all in South Carolina. Again, October 8th is when I will be in South Carolina. Let me go ahead and share my screen again. show you the event. Boom. Right here. Next year, I'll be in New Orleans, Louisiana, October 18th to the 21st. So if you're in New Orleans, happy to meet you guys. So if you're in South Carolina or the neighboring states, you're willing to, make the drive or quick flight, let's meet. Let's hang out. Grab a ticket here. Okay, let's load this bad boy up. Internet's slow today. I don't know what's going on. Here are all the details. $70. We got food being catered. It's everything that we're covering. But we're gonna mastermind together. All right, it's from I think we'll be here a few hours together. About almost like a day's worth. Right, it says 9:30 to 4. So about a day's worth. Right, about a whole day. And we gather, break bread, right? Fellowship, mastermind, think big ideas. There's going to be other speakers there as well, including our very own Brittany Green also is going to be speaking here. So it's not just me speaking, but there's going to be a couple other speakers. And that's just going to be a fantastic event. So get your ticket. Do live coaching on the spot. Running people's numbers live right on the spot. That's all I do when I go speak. I just run numbers. Do the same thing I do here, right? I'm not interested in motivating you. Don't want to be that. I just want to run the numbers. Here's what the numbers say. Here's your strategy. What are you dealing with? Okay, boom, boom, boom. Here's how we do that. Awesome. This has been very great, very helpful. Thanks so much. Wonderful. We solved for excellence today. Love it. All right. I don't see any other comments. I think we're done. It's been great hanging out with you guys. Check the links in the description below regarding all the different services that I mentioned here. We talked about different banks, the event that I got going on next month. If you're like, all right, I'm ready for, velocity banking coaching, one-to-one, at consultations. I'm ready to, dive into this, go long-term. My services are available. They're open. Go right back to the website. You'll see financial coaching. I got a few different options now, quite a few different options that, work based on how much commitment you want to, how long you want to go. Like I work for people. I work with people as long as like 7+ years, right? I'm looking to work with people for a lifetime. I really like that. I can do something as little as one consultation just to feel me out and kind of see if this is something you want to do. Then I have, coaching packages, 10 phone calls, something like that. Got my courses, right? Community. I have a ministry now as well, the Finance Geek Ministry. That's an amazing opportunity for those who are, really backs against the wall. Cash flows like $50 a month, $100, and even negative, right? You're looking to get around a community of people that can help you out besides just me. That's what the ministry is all about. It's a ministry of finance, okay? This is something that really doesn't exist. It's a ministry of finance. That's what it focuses on, finance. Like really helping people improve their whole entire lives, live intentionally with a purpose and be driven, okay? So that's something that's going on. It's really awesome. We're having a lot of fun. Just had my first session last month. Next one's coming up. It's the first and last Friday of every month. We'll be on Zoom together or some kind of function just like this to eventually doing something in person, right? A Kingdom Financial Conference. Did one of those already this year out in Akron, Ohio. You guys can check out that video. That was done on June 24th through the 26th. And it is on another YouTube channel called The Light Church. You want to check that out. That was a phenomenal event. 3 days, just running numbers, right? Back to back. Okay, I don't see any other questions here. We're good. Awesome. Let's see, anything else I can share with you guys that I'm working on? My coaching will close end of this year, so we got the rest of this month all the way up to December. So I'm getting ready to hit my capacity again towards the end of the year. So if you want to get involved in one-to-one working with me, creating financial freedom, paying off all this debt, building a business, I'm expanding, okay, my services, and I'm working on a very, very unique partnership coming up very soon. I won't announce it yet. I want to spoil it, but I am working on something that's very, very advantageous for my higher income earners, people that are doing multiple six figures that watch me, 7 figures. You're doing well, but you're having tax pains, management pains. Something very unique is coming your way. For people that are making 30, 40, 50K, right? Single moms, single dads, right? People that are, you're just trying to get by, trying to survive right now. That's what the Ministry of Finance is about, the Finance Geek Ministry, focusing on you guys answering questions, right? You just got to come with your numbers, come prepared, come vulnerable, ready to answer questions, ready to get your numbers run on the board, right? Ready to think big, change your mindset. It's important stuff. That's how we jump from making 30, 40, 50K to 100,000, right? Once we get to 100,000 or more, then we're able to jump again because now your mindset is expanding, right? It's expanding. Love it. Albert says, I've been working with you since day one. You started, I've learned a lot financially. Yep. We're just going to keep expanding. Like, I've got people in my community that are doing what I do for other people, and I'm bringing those people together so that they can help you guys out even more. So more people can get helped, because now I'm getting to a point where a lot of people are reaching out. A lot of people want help. It's in need. And there is really not a whole lot of financial coaches and consultants teaching velocity banking. Like, it's very scarce, okay? So if you're someone that is doing velocity banking, you want to teach it, you want to coach people, you want to add it to your arsenal. Maybe you're a financial coach already or a consultant, and you came across this concept and you're like, I love it. You want to add it to your arsenal. I want to be able to send you people, because I got tons of people I'm already working with, and it's only going to get more. So I need other people, and that's the other way that I'm going to be expanding myself. And it's also a contingency plan I have in place. In case something happens to me, my clients will be served by the people that I've been serving that are now teaching, right? So I'm going to pass that on if something were to ever happen to me. But that's it. That's everything. We're done. God bless everyone. Have a wonderful day, and we'll be talking soon.